CCM, or in classic contract management, and in RAR.1.3, we have this grouping, especially if you have, for example, one POB and several payers. This is for example, for large logistical service provider, the case, maybe for other industries as well. And if you have different payers, you want to account the postings out of these invoices as the invoices do to different accounts. So the invoice corrections must be assigned to different accounts. And this is currently in CCM and in RAR 1.3 add-on not possible. And we want to unbundle this. Of course, everything will be done in a way that you can switch it on or switch it off. So you still can have the old behavior in place. So all functions we are providing here, or most of the functions, new functions we are providing, we have to take care that the old behavior still remains, if that is not an issue or an error. Because some customers may rely on these functions. And last but not least, I want to mention a big project we have currently at SAP. That's the local currency conversion. Local currency conversion was first a topic in the year 2000, or it was probably before, but then it came up quite heavily because we had this euro conversion where many countries undergo a currency reform or a monetary reform to adapt for the euro. So there a tool had been developed in ERP which supports this currency conversion. So in ERP we should be fine, but thinking of our add-on, this had been developed, let's say, from 2014 on, so a long time after this tool was available. So the integration was not there. So all our processes may require certain enhancement in our solution or to this tool. So we have to develop something to deal with the local currency conversion. The same for S/4HANA. There a complete and OP and cloud solution. There a complete new tool had been or is going to be developed. And many of our solutions must be integrated into that, not only revenue accounting, also others, financial assets and so on, needs to be integrated into that. And why we are doing that? Because now we are experience a change or that other countries are going or are migrating to euro. Now in 2023 it will be Croatia. Maybe 1 or 2 years later it will be Bulgaria and Romania. But it's not only about euro, it is also about other currencies, where, for example, a country is undergoing state bankruptcy, Argentina maybe, I don't know, and or hyperinflation like Venezuela. And there, a local currency conversion tool is appropriate. This tool will be probably used by our service teams or by the customer itself to deal with this kind of processes. And I just want to mention, it's not only just calculating from the old currency to the new currency. You also have to deal with the whole process. First, you have to understand if everything is fine that you in your system, that you can convert and that there are no inconsistencies. So you have to check for inconsistencies. Then you have to go for this technical migration or this technical conversion. And later on, you also have to understand if everything worked correctly. So you have to do some reconciliation. And you probably, or for sure, will find some rounding effects. And there you have to think about what to do with these rounding issues or rounding differences. And so thinking of all the solutions we have in S/4HANA and in ERP, that's a huge undertaking for SAP, and we are part of it. And we want to provide that by end of 2023 so that everything works fine with this conversion with Croatia. Yeah, this is something which is not only relevant for companies in these countries, but also for companies who have subsidiaries in these countries. Yeah, these are the topics we are working on currently, and I hope I gave you some information about the status of release 1.3 add-on. And if you have questions, especially thinking of new functionalities, just address it to us. Thank you very much.
Martin, can you go back to the top of your slides? And just go through the slides just very quickly, because we started the recording late, so I just want to make sure, just page through them. Yeah, that's it.
Shall I explain
something?
No,
just page through them. No, don't say anything. Just page through them. Just for a couple seconds. Yeah.
It's about the maintenance period.
Yep, exactly.
And here we some explanation what we are doing, that we are not only doing bug fixing.
Yep.
Then the support package schedule.
Yep. And then we got it about
the nodes, and then the exemplary functions we delivered with the last.
Is there going to be? We had this question before. Will there be another customer connect program next year?
As I said, the process will change, and I cannot tell you at the moment how this process will be. But there are discussions with management how to establish these processes.
Okay.
How to create these processes. I've heard that in contrary to the existing or to our existing Custom Connect programs, it won't be rather a permanent process and not one project and then maybe in 2-3 years again another project. Hopefully, I think it would be very much useful to have this as a rolling process, a rolling roll-in process, more or less.
Right.
Yeah.
Okay, great. All right, so thank you so much, Martin. If there are questions, send them to myself and John, and we'll get them over to Martin. I want to go quickly through the agenda, and then we'll move to Volkmar. But we are running a little over schedule, but Volkmar, we want to make sure you've got enough time. So let me, Martin, if you can stop sharing, then I'll share.
Yeah, I'll try hard. Just a second.
Yeah.
Stop sharing.
All right, there you go. Thanks.
Yeah.
All right, we had a technical issue in the room. We were trying to get resolved on the camera, so apologize, but let's just go to the slideshow for a second. Oh, for some reason. There we go. Can people see this? Sorry, we're in a new setup here, so
yeah, you can see.
Okay, good. So really, the agenda here, we just went through one of the product updates, so we're going to go through another one now with Volkmar, and then Jay from Juniper will be on. We'll try to start Jay at 15 minutes past 1. Volkmar, so you've got enough time. So let me stop sharing, and now I'll move it over to Volkmar to start the product updates on the S/4HANA and cloud side. Okay, Volkmar.
All right. Yes, thank you. And no worries. I should be able to stay in time.
If you need a few more minutes, it's okay.
Yeah, don't worry. I don't want to promise too much, but I will try to catch up. It's good to have an equal share between what's happening in our add-on releases, as well as probably what the new stuff is, and this is what I wanted to talk about. So my name is Volkmar Zahn. part of the product management team for S/4HANA Finance, so in a similar role as Martin earlier, as a product owner. And I would like to touch base on some of the new developments to come. So also here, just the disclaimer that to some extent I will be talking about future functionality. And we still believe that it's quite valid to share with you what the development teams have been working on. So before we go into the innovations, I think it's always good to touch base on what we want to take to market as automated revenue management. So what is revenue recognition in S/4HANA? Besides a general overview about future planned functionality and innovations, I would like to then also give you one specific scenario, which is event-driven start dates. I will leave it there just to keep the suspense a little bit open. And I will share that based on the S/4HANA Cloud release. So in the public cloud, as you may know, we deliver in more frequent cycles, so every 6 months. Besides then what will probably be the future, a continuous feature delivery. But here I will be talking about what's planned to come in 23 or 2, which is January, February next year. So let me start a little bit with automated revenue management. I'm sure you've seen that many times, and I don't really want to explore this too much again. But I think we all agree probably that if we talk about revenue recognition, this is a highly diverse and also a complex market with a bunch of different industries and scenarios, from product sales into services, into a project business. Even in projects, you have different flavors. High tech again, probably, and telcos with their own complexities, especially around the IFRS 15 standard. So as a software provider, obviously, we see all these industries and all these use cases, and we always have to fine-tune what is the best solution for a customer group, for an industry, and what serves best the use cases. And what we thought is we take this to market, not just one solution flavor. We have a good portfolio, and we bundle this up under the umbrella of automated revenue management, which is a go-to-market theme. Yeah, it's not a dedicated product or whatsoever. It's really a go-to-market theme. But if you lift the lid and look underneath what is available, we essentially talk about two solutions. One is also what Martin explained, the so-called revenue accounting, which has a history as an add-on, then was moved into S/4HANA and became essential part of S/4HANA Core. And then, of course, was extended or is extended. And that's one flavor. The other flavor we see quite a big pickup is the so-called event-based revenue recognition. And event-based revenue recognition has more history within the public cloud. It was initially delivered in professional services, then extended into the general service business, into sell from stock product sales scenarios, and so on. And where we now also want to make this available subsequently in on-premise in the private cloud edition. Just one little reminder here on this one, which you may wonder what that means. We talk a lot about revenue accounting, which was in ECC its own product, is now part of S4 Core. But what we chose as a direction in the public cloud, S/4HANA Cloud as the public cloud flavor, is that we wanted to rename this scenario, and we refer to it as contract-based revenue recognition in contrast to event-based revenue recognition. And there's probably two main reasons for that. The first one is, obviously, if you look at the IFRS 15 standard, there's a lot of discussions and talks about the revenue contract, the performance obligations, and we felt that this is well represented in the name contract-based revenue recognition. That's point one. Point two, we wanted to differentiate to revenue accounting because many customers know revenue accounting from the on-premise world, even in ECC, and of course come with a certain let's say, a few on what is available. In general, it is the very same code base in the public cloud. However, we chose not to release all the scenarios customers may know in on-premise. So for instance, for product sales and sell from stock, we believe that with event-based revenue recognition, you're quite well served, and there's not necessarily a need to go into a revenue accounting flavor. So that integration scenario is not available. What is available with contract-based revenue recognition are basically BRIM scenarios, so either the dedicated integration into the public cloud flavor of BRIM, which is subscription billing, SAP subscription billing. We also offer the integration into convergent invoicing and into the provider contract, and we also do offer third-party integration. So it's a smaller set of functionality, which we felt also, and that's the second reason, is deserves its own name and its own scope item. You find the corresponding scope items within the Best Practice Explorer. Again, if you're not familiar with these tools, it's really worth to look into them because they come with a test script and also a description what the solution offers, diagrams associated with that. So that's just a little background on the go-to-market, automated revenue management, event-based revenue recognition, revenue accounting, contract-based revenue recognition. That is a starting point. So what I had in mind is to give you a little overview into our innovations and what is planned, and also what we have available. And for that purpose, I really like to go essentially into the so-called Roadmap Explorer, which is our SAP's tool to show planned and also recently available information. You can find this if you want to look for yourself under the business capability, revenue, and cost accounting. And essentially, it's split out into the different timeframes. You can even go back into 2019, what has been provided as an innovation. And then for the blue part, this is available. For the orange part, this is planned, and you also see an indication when SAP plans to provide certain functionality. Also there, just to highlight, there's a little disclaimer there. It's, of course, as it relates to the orange part's future functionality, which may change. And so it's worth to regularly maybe look into the Roadmap Explorer. Just a little reference. So here, obviously, it's always a question how to structure new product features, new innovations, and especially with the on-premise release 2022, which is our latest release, we added more bodies and extensibility options. You also find that we enhanced the revenue spreading and contract combinations feature. So there's quite a lot of capabilities which have been provided as part of this on-premise release. And for every one of these features, usually there's a little bit more information. So for instance, for the suspend postings in revenue accounting, there's a dedicated report. You also find some abbreviations. I know this is usually usually a thing customers and partners may not be so happy that SAP extensively uses abbreviations. OCM stands for the Optimized Contract Management. And again, this is a repetition from earlier sessions, but we refer to optimized features, optimized contract management, optimized inbound processing, scenarios, and areas within revenue accounting, which we had refactored in line with the S/4HANA. So as you remember, revenue accounting used to be an add-on. When it moved into S/4HANA, first of all, it was simply moving the packages technically into S/4HANA, but not necessarily also then changes. So you have the very same functionality as also in ECC available under classic capabilities. And when we enhanced the functionalities, for instance, Fiori apps, or additional disclosure capabilities, we usually refer to it as optimized contract management, optimized inbound processing. Just a little refresher on this optimized wording. And you may know this already from other areas within finance, like the classic GL as well as the new GL. So it follows very much the same logic. If we look into some of those scenarios, you also find we break out into S/4HANA 2022, which usually refers to then the corresponding on-premise and private cloud edition release, versus S/4HANA Cloud, which then refers to the public cloud scenarios. And also here you find basically what we put into the corresponding release cycles. And you also find information around what has been made available within event-based revenue recognition. As I mentioned earlier, there's an extensive push for new scenarios in event-based revenue recognition. So we had already scenarios available for project systems, which is used in professional services especially. Sell from stock was added essentially in the OP 2021 release, and as you can see is now extended. So this is the 2022 release with additional bill of materials scenarios, and especially the advanced intercompany sales, intercompany stock transfer, and valuated stock in transit scenarios. This is essentially very interesting because these are very new scenarios also provided by our our quote to cash, I need to be careful, quote to cash colleagues, so the sales colleagues, they have completely refurbished the intercompany scenario. Very interesting, very well received by customers. And along with that, of course, we in revenue recognition had to participate. One very important and interesting topic are, for instance, Incoterms. So if you're looking into product sales, it's worth to look into what has been made available in OP 2022, in this case, for the event-based revenue recognition. Another highlight in this context is the maintenance-centric scenarios. I just want to spend a minute on this one. So as a part of the OP 2022 release, we had especially a new scenario being delivered. So remember, we had the integration to project system for event-based revenue recognition. We added the sell from stock scenario, and then in OP 2022, the first step into maintenance-centric service scenarios were provided. So maintenance-centric service scenarios, the way I like to explain this is more a heavy lifting maintenance process where you, of course, sell a maintenance service, which is then represented through service order, but where you then also need to track cost as part of plant maintenance orders. And this is then modeled accordingly, where plant maintenance orders are linked to a service order, and you can track cost as well as revenues in this kind of bundle, in this hierarchy of objects. Along with that, also the integration to service contracts, so the S4 service contracts and EBR was provided. This is a little bit more simplified, straightforward approach. You may remember that also revenue accounting is integrated to service contracts, but what we've seen is that for many customers, they essentially want a straight line revenue in a very straightforward process. There's no allocations involved. In that case, again, it's very interesting to look at the integration of S4 service contracts, where revenue is ratably recognized over time based on the billing plan information. Also, that was added in OP 2022. So that, again, color code blue means has been provided, so you can look at that. But with that, I would like to walk over to now the plans for the upcoming new year. And to start with, of course, that is part of the 2302 release. And there, again, we make additional moves into cost-based POC processes. Here in this case, in the public cloud, we do have service orders. We do have a slightly different process when it comes to maintenance and also other service scenarios. So in public cloud, we only talk about service orders and service contracts. But for those objects, obviously, we also felt that we need to extend the capabilities, and especially within event-based revenue recognition, EBR is very strong when it comes to POC methods, percentage of completion methods, and what we have been adding is the integration and the revenue recognition methods for POC, for cost-based POC for the service order, which essentially means you plan the revenue, you plan the cost based on the service order, and as cost accrues and is recognized and expensed, you would then also, of course, based on the planned cost, be able to recognize the corresponding revenue part. So that is a scenario which is coming with a new revenue recognition key. This is how rules are kind of bundled in EBR, in event-based revenue recognition, and is then in January you should find more information under this innovation. There's also further localization. So when it comes to the public cloud, it's important to understand that scope items need to be released for a country, because usually within the public cloud, there's a lot of underlying business content available. Chart of accounts, for instance. And along with that, our localization teams need to do something. So here we provide further localizations of the scope items we have, 3KK, 3VS, abbreviations again, for contract-based revenue recognition. These are the two scenarios we have. They receive further support in additional countries. Parallel accounting or universal parallel accounting has been extended for additional methods in EBR, for real-time processing, for time and material. So besides the POC methods, EBR is pretty strong when it comes to time and material scenarios and project billing. You see this essentially very much in professional services, where consultant is charging time, and based on that you need to bring this together in an invoice. You may need to write off certain working hours. You may have a revenue cap. So there's a lot of scenarios behind that. Professional services solution, which comes along with that, is very strong and going to be extended, of course, over time. And here, parallel accounting was an essential scenario we had to extend. And then finally, I come to the so-called event-driven start dates for revenue recognition over time. And you see here, this was quite a major development, and this is also what I would love to explain to you in a little bit more detail. So you see here that, of course, the overall process is far more extensive than I will be able to show to you, but it starts with the setup of the contract and a POB to flag this accordingly for this new kind of revenue recognition way, trigger the fulfillments. We have contract changes. Of course, the finalization of a POB is important, and so on. There was quite a lot of stuff the development team had been working on, and that came along with additional improvements. They did not deserve their own innovations, so I plugged them into as a separate product features, performance improvements. Then there's an additional user exit being delivered, and again within the public cloud also the BRF, the business rules framework, is used and needs to fit into some of the latest developments, like a true system landscape 2SL here. So this is the scenario. Actually, I would love to show to you a little bit more. Again, please feel free to also use this roadmap Explorer, and visit this on a regular basis. So we plan to extend this as, of course, development teams feels comfortable with adding new innovations. So event-driven start dates, this is really what I wanted to focus on. innovation you see here on the left-hand side. But what is this about? So imagine that you sell a software. Could be also maybe a product sales, but essentially what happens is while you sell a certain quantity, you are not able to recognize this immediately because the recognition depends on the need or the fact that you have activated certain licenses. If we stick to the example of a software license, let's assume that this was a software license for 3 months. We sold 10 users for that duration of 3 months, and we now see that this is activated over time. For instance, it starts with the 10 users as part of the contract. 2 users start to use the service on February 1st. Fulfillments need to be recognized over the 3-month cycle, starting with the activation date. I think that should say February 1st as well. And later on, you have further activations until finally the 10 users are running. So for instance, in the March timeframe, you have 3 other users that activate the service and so on. So what that means is that we now, when we look at the document flow, we see the different activations. Let's assume, and we see this later on in an example, we have 3 activations. The first activation in February, second one in March, and the last one, the third one, up to now on May 5th. And again, all of them are for the time frame of 3 months. So what the system does is it essentially documents that these fulfillment events have occurred, tracks that in the system, and also then breaks that out. So for the first activation, we will have 3 fulfillments in the system, for February, March, and the April timeframe. The same here then for the March activation. You also see later in the revenue schedule, of course, that will be aggregated for the corresponding months and when the activation is running. There's a little difference here in the last activation, or the third activation we see. So that starts on the May 5th, and as a result, you actually also have 4 fulfillments which are shown because essentially we start here on the 5th of the May timeframe. So this is the starting point, and also for me then the reason to shift actually into the system. And I always have to say that I'm using a development system. Again, this is a future functionality, what I'm showing to you. You saw all the disclaimers and also the lab preview button or box at the top. So I'm using here a development system, and development systems sometimes are a little bit temperamental. But let's see if it behaves. So here in this case, we start with the homepage. Not sure if you're already familiar. Maybe you've seen that earlier. So that's a new theme which was provided with a new also homepage, which allows you to structure a little bit what this looks like. But essentially, it's the same revenue accounting. Okay, I waited too long. Let's see. This was actually the fallback. You see, I don't want to have the fallback. I want to have. Okay. Maybe. There. I want to have the real solution. So. Again, so we start with the homepage, and you're probably very familiar. It's a new theme which is offered, and we want to go into the Monitor Revenue Contracts app. That is a starting point. If you want to look at specific contracts, you have different criteria, attributes you can look at according to accounting principle or your customer, maybe the operational document. You remember that revenue accounting is integrated to a lot of so-called sender components and integration scenarios. So you may have the sales order ID you may be looking at, or you know which contract is relevant to you. I know that because I've used that before. So I know here my revenue contract number, and the nice thing about this monitor app, which was extended and goes beyond the classical managed revenue contract app, is that it also provides you some nice KPIs and attributes. So, for instance, you see if there's a postponed item. The term postponed items essentially means if there's any issue within the inbound processing, so within the inbound interfaces, which stops to further revenue recognition events to happen, then this would be flagged and allows you also, in that case, to navigate into that. In our case, this was not the scenario, so I can move into this revenue contract, and within this revenue contract, here at the top, you see some of the essential data, the contractual price, if there was any invoices or if revenue was already recognized, then you would also see the corresponding data. Here in this case, we just received the order and also some fulfillment events. We then have the performance obligation in this case, and here within this performance obligation, again, we see the effective quantity of 10 users which have been sold, and I would like to navigate actually into the performance obligation itself, because this event-based start dates of course come with some additional configurations, and I find this here under the fulfillment data tab. So a POB that qualifies for that scenario is actually an event-based POB. There's a new so-called start date type, which says defined by each fulfillment event date. And then, of course, because the fulfillment and revenue recognition is then linear and time-based, we would also need a deferral method. Duration in this case would be the 3 months. So that is the configuration. And as you remember, we said that for this 10 units, we do have 3 activations which came in, and I can see this nicely through the document flow. See here we have the 3 fulfillment documents. So 2 users which were activated the 1st of February, then another 3 on the 1st of March, and then another 2 on the 5th of May. And here I can also then see that this is then used accordingly for the fulfillments, which leads to the revenue recognition. So because it's a 3-month cycle, for each month there's an individual fulfillment received, which breaks out these 2 users then accordingly to the month. So that's more like a technical representation. This also leads then, of course, to the corresponding revenue schedule. And for that purpose, I want to move to the related apps. You see here there's a bunch of apps available, very helpful ones, which we extended, like the allocated amount explanation, and also recently was added the manual spreading as well as the price allocation. But here in this case, I'm interested in the revenue schedule, and within the revenue schedule, you find now how this is broken out over time. So essentially these 3 activations lead then to the corresponding data. So here in this case, we start in the February timeframe because that was the first activation, and so on, and move right into the future months according to when the activation happened. So that also brings me to the end of this presentation. What I wanted to share with you was a little bit an update on the roadmap, also where you find all that information. Again, please look at the roadmap frequently, because we of course also provide updates. And here I wanted to share with you one new product innovation which we plan to ship in early next year, which of course then first of all will become available in the public cloud. With that, I would like to hand back to Pete. And
all right, thank you, Volkmar. And if anyone has any questions, they can send them to me or John. We're now going to switch to, I think I saw Jay online. Let me make sure that Jay is presenter Jay from Juniper Networks.
Hello, Pete. I'm here.
Okay, great. Just trying to make sure we've made you a presenter. John, were you able to make it?
Yep, I made him a presenter.
Okay, so Jay, it is.
You share, Jay?
It's over to you.
Yes, sir.
All right, slides are coming through.
Outstanding.
All right, take it away, Jay.
Good afternoon and good morning to those of you on the West Coast. I'm on the West Coast. It's a pleasure to be with you today. So I'm here to tell you a little bit about Juniper Networks and our SAP RAR and 606 journey. But before I tell you about the journey, I was going to tell you a little bit about myself. So my name is Jay. Obviously here with you today because I was the chief architect at Juniper for the 606 adoption as well as our RAR project. Been around the Valley a long time working in high tech. And my role is essentially as the business architect within the finance department, leading a small team, focused on M&A projects, implementations, especially SAP. And of course, I also run a BI function as well. With that, a little bit about Juniper. As you can see in the upper right here, we're about a $5 billion a year company in terms of revenue. We have global reach, so 50 countries, fills down to almost 100 company codes in our SAP system and our one instance of SAP ERP. And also I'd like to highlight a little bit about what we support in terms of customer base, a pretty wide variety of customers, everything from your cloud provider, your kind of platform as a service, say Amazon or Google Cloud. We refer to service providers. These are basically phone companies around the world, and 49 out of 50 around the world, there's one that's under embargo that we can't actually sell to. Otherwise, it'd be 50 out of 50, sure. Other companies that you would think of, everything from a retailer to a university to a bank. And now we obviously sell networking products. It's a horizontal portfolio, routing, switching, security by hardware, software, every kind of service you could imagine. And given it's historically a horizontal service, I would highlight that the software is a growth area for us as we're trying to create a more tiered experience with our software. So you could think of this in SAP terms maybe as a variant configuration or something like that, where you'd sell software and price it according to tiers, which correspond to the use case of the customer, right? You'd imagine the use case at an AWS data center is significantly different than, say, a Walmart store, right? So this is important. It'll come in later as I talk a little bit about the complexity of our revenue. Okay, with that, let's jump right into the journey. So as I'm sure you're all aware of the ASC 606, the FASB standard that came along. At the time, we were a little bit new to SAP. We'd implemented SAP ERP in the 2013 to 2016 timeframe. And of course, we had implemented SD for revenue recognition. We had added some custom tables, programs. It amounts to a custom subledger to facilitate revenue recognition. Now, I guess for the purpose of this meeting, we would consider that to be a manual revenue recognition, essentially an MS Access database, a lot of BI reports, stuff like that. So very manual, pretty labor intensive. That Access database used to give me nightmares. I'd routinely be asked by the revenue accounting team for help, right? Help with quarter close, help with forecasting, help with writing queries in that Access database, help with writing BI reports to feed the Access database. It was sleepless nights, let's say. Not my favorite. As the architect, it wasn't really my job per se to be involved in that. It was more the extracurricular. So Again, that'll come in later as I talk more about it. So now with the ASC 606, you see in the bottom of the slide here, we took that as primarily a technical accounting project. In other words, just kind of revising our accounting treatments and then recalculating what our revenue would have been. From a technical perspective, this amounted to some minor enhancements around SAP, some GL accounts, which they use company codes to facilitate some consolidating entries and whatnot. And this was all done in time for our 606 compliant. We chose the dual reporting method, if you're familiar with that. So this going back to 2018. And as I say this early 2017, this is right around the time that we were also looking into how to kind of automate that revenue, how to get out of this MS Access. This is when I met John for the first time, and I think some others on the call. We were working with a couple different SIs, SAP. We were also looking at a couple other vendors as well. So it's really a holistic look. But at the time, decided not to pull the trigger, which looking back on it, it's a big blessing. Talk a little more about that in a moment. So now moving right along. So in our revenue automation project, this is where we're actually implementing RAR. I want to highlight a little bit about these goals that we took. So obviously, as an architect, part of my job is to sell the project internally, to get the budget, to get the executives to approve it or go along, make sure their needs are met. And so I just highlight this first bullet as demonstrating revenue impact to the relevant approvers and stakeholders. So in the past, our revenue had always been kind of reactive. You wouldn't really know until after the quarter was over what the revenue is going to be for a particular order or even just as a whole. Even forecasting is very, very difficult. We had to run through this Access database, cumbersome process. You can only do it a couple times a quarter at best. So in pitching in that particular bullet was the pitch to the CFO, who really wanted better predictability, if you will, in his world. That was a big motivating factor. And as soon as he heard that, he was very eager to get started. And then the second bullet, again, talking about that MS Access database. I mean, for years, all I wanted to do was get rid of that. And that was, I think, a common theme around revenue accounting. It was just too much work. It didn't scale well. It backloaded the work. So everybody'd have to stay up all night, for a few days to close the quarter. Really awkward. And then in the third bullet there, I talk about scalability, auditability, insights. And this is really a pitch to our sales finance and service finance and tax organizations who were really looking for that. The insight side of it, maybe less so than the predictive side of it. And then finally, the accelerate close is the typical thing you'll hear from a chief accounting officer, and that was clearly a big motivator, I think, even to give me the green light to go do the discovery, do that kind of point of view, look at vendors and stuff like that. So that was kind of the pitch for the project, or goals, if you will. And then in terms of results, the project took about 12 months, and that's 12 months from what I would say signing the system integrator. We chose Bromisol out of a pack that we'd been working with for years. And so we'd started right around May 2019, and for our go live in May of 2020. So it's about a 12-month turnaround. But if you follow that May 2020, that is peak of the pandemic lockdown. And so that pandemic cost us about 2 months because we were nervous to go live with everybody remote and a lot of people in India, time zone changes. I think historically we tried to get everybody in a war room, to go live, to do the cutover tasks, stuff like that. So we delayed a couple months on that. We also had a little bit of a delay around some changes we wanted to make that were late breaking, which is an interesting concept I'll come to in a moment. And in terms of the percent of revenue automation, we did 100% of what we wanted to do, which turns out to be about 90% of what you think of as our gross revenue. And this is pretty typical, right? Your 90-10 solution, your 80-20 solution. Not every revenue motion is well suited to an automation or a tool or an ERP, right? And in our case, you could think if there's certain reserves that you need to take that are balances and topping off. We also had a motion for consignment, which was not really in our ERP per se. At least it wasn't in SAP SD. It was only in the FIGL. So it was really not a compelling reason to try to put that through RAR. So good news was 100% a target. We automated everything we wanted to. And we did it, kind of at the front end with a very strong BI component to it. So in other words, as I'm creating a quote or a sales order, I have that integrated with RAR right away, so I can immediately feed back and say, in the business intelligence insights perspective, I could tell what my revenue is really going to be, when I think it's going to be, and what the side effects maybe are of making a concession or a discount. So obviously that was the key thing for the CFO. We also managed to accelerate our close, which was very welcome. And I think most important for me was remove that labor-intensive quarter close effort. You have accountants staying up all night. They make mistakes, or it just makes for a horrible life-work balance and so many other drawbacks to doing that. So not having to do that, indeed to balance out that work throughout the quarter, was a very big win for us. And of course, we're still live with we're still in ECC, so we'll probably have to revisit this soon, going to S/4HANA sometime in the next few years. So looking forward to experiencing some of those new releases and new features that Volkmar was talking about. Now, last but not least, and I think this is going to be the topic of today's primary discussion. So as you see where we came from, and me having been looking and working and talking about this for years and years now, what do I recommend, right? So how would I approach a project like this, say, if you're coming from a third party or a manual process such as ours? How to do that, and how to understand the experiences of others is another thing I would mention. So in my benchmarking, as I was preparing to do this project, as I was doing RFP, sizing up vendors and SIs, what I noticed was a lot of projects were trying to do the 606 and the RAR at the same time. And that made for a very difficult project. It made for a moving target in terms of requirements, as accounting judgments would change, revelations would happen, in addition to all the other challenges that you have. So that led me to two things. So when I talked to other people about their experience with RAR, about their project, their results, whatever it is, what their timeline was, what their TCO was, I always asked myself, what else were they trying to do? Is it in the context of an ERP project? Is it in the context of a 606 adoption? So that understanding, I think, is key. Now, my context was more or less standalone, and my context is I tended to treat it like a next-gen system implementation. Obviously, I was coming from a manual process or Access and Excel-based process. So we had great success, I think primarily due to our focus on the business requirement analysis and the functional specification. We were very careful about that. We spent a lot of time on it. And indeed, our project felt like it was running behind in terms of dates and target dates for go live, simply because we spent that extra time. But looking back on it, that was, I think, key. And also, our focus was on transformational changes. Right? As I mentioned in my role, think about things like M&A and corporate development. I'm thinking 2, 3, 4, 5 years down the road. And so I'm incorporating our future business models, as I mentioned, to software as we increasingly transition our software perpetual license to subscription and SaaS consumption, the more futuristic forms of software delivery, and indeed pitching that as more of a vertical product as opposed to the horizontal that I've been talking about, right? So that whole product strategy, in addition to some other transformational changes that we were making, we were very well served to consider that during our approach to requirement analysis and specification. Another common area where I saw, or at least benchmarking and networking with others about their RAR project to other companies, is oftentimes not performing that fit gap analysis the way it really needed to happen here. And I think in a project like this, it's especially important, just this concept of revenue accounting and the kind of motions, the kind of functionality that you're approaching. It's really important to really kind of group, categorize your revenue. And in RAR, we call that the POB, right, the performance obligation. But I think also materially important is the sales motion, the sales channel, you know, not just what you have today, although that's what I wrote there, but also what you have in the future, right? So we see a lot of variability around that, and it makes a huge difference when you're actually going and trying to do that implementation and that fit gap. Finally, I tend to be, how should I say? I tend to be very curious. You know, one thing, you look at my resume, I you know, computer scientist. I spent a lot of time in IT and R&D, but my big curiosity in my job is business and how business function, how finance function, how sales function, right? What they actually do with the system, rather than what the system is capable of doing, or what the best practices for implementing a system are. And so in that way, I have a penchant for challenging, right, what the business requirement is. In this case, so I'm challenging my revenue accounting team to think differently, to optimize outcomes, to not just lift and shift whatever they had that they thought was right, but rather to have them understand what the possibilities really are and where the business is really going in the future. So again, transformational changes, and a point that I think you'll hear a lot if you're encountering RAR in particular is some technical difficulty with things like multi-company code and multi-currency accounting treatment. Indeed, this is something that we were doing in the past, but when we came to RAR, it was something that I challenged the team to rethink. You know, part of the reason was it was somewhat technical and that it looked really challenging to do in RAR. But part of the reason was it just didn't feel right just to move, say, allocations between companies like that. To me, that was maybe technically correct or acceptable in the accounting space, but some of the other functions maybe not so much, right? So if you think about the purpose of a company code, it has to do with your tax structure, right? So does the tax department know that you're moving revenue between company codes, as an example? I'd say similar about the multi-currency, that can be really tricky. You kind of run into this commutativity of mathematics issue, right? So division in particular is not commutative, right? So when you're thinking multi-currency and you're having to translate everything into one currency, do your revenue allocation, and then translate it back, you're going to wind up with differences, right? And how to calculate those differences, where to put them, becomes a pretty challenging problem, a math problem, but also somewhat of a accounting problem as well. So in your statutory accounting, that might not be so acceptable as maybe in revenue accounting. They'll tell you it's probably immaterial. So that challenge actually came with a good result, because I was able to really optimize our definition of a revenue contract to be not only something that would make sense techno-functionally, but also something that actually got a better result and made more sense to the stakeholders internally around accounting. So the last point on the recommendation slide is going to be that data migration. Now this, I think, a common theme about just about everyone I talked to that worked on RAR and a RAR project is, although RAR has a nice data migration tool set And it gives you some good comfort to know that you can bring your revenue waterfall or your kind of unfulfilled order base, and you can bring all that into RAR. But there's still, it's, how should I say, it's kind of like somebody giving you a puppy, right? You still have to feed the puppy, you have to walk the dog, right? So I've noticed a recurring theme of Juniper included, kind of underestimating the complexity there. And, we did make some mistakes that I think felt painful at first, but actually in hindsight were pretty easy to solve for. But it's something that I tell everybody who asks about doing an RAR project is be careful about your data migration and be sure to do the due diligence of testing through and reconciling the result on your data migration. So with that, Pete, John, I'm going to leave the slide up and open the floor for a discussion.
Yeah, I guess, thank you so much, Jay. I mean, I think we met at one of these user groups about, I think it was 4 or 5 years ago, and now you're presenting, so that's great. We appreciate that. And I think now we want to go a little bit into a fireside chat. John and I thought it'd be useful as well as yourself.
It's kind of chilly, Pete. We could actually use a fireside room, I think. So,
just before we open it up, maybe for general questions, John and I thought we'd do kind of some Q&A. So really, the first one I had was, like I said, we met at one of these user groups, and then you kind of, I think it was in January of 2019, kicked off a project. But if you had a user member today on this call, and they're about ready to kick off a project, so they're essentially in your shoes now, what you were in back in January 2019, what would you recommend, or what couple things would you recommend to that customer in terms of how they would approach their RAR project?
Good question. So, as kind of the architect, I think the project has a much wider meaning than, let's say, the implementation or the business person, right? I'm thinking the project, to your point, it really started in, a year before we actually did any work in terms of like gathering, requirements, hiring an SI and that kind of thing. So in my world, it's about vendor selection. It's about trying to forecast what your costs are going to be. It's essentially about creating an RFP and possibly doing a proof of concept. So that was a pretty important stage. And I give a lot of credit to you, Pete and John, for hosting these meetings, because these were super helpful. Indeed, also having the opportunity to talk to you guys and the other good product experts at SAP and indeed other customers who were going through this journey. Simply attending conferences, attend Sapphire, and attend GRC Financials. It's the kind of intelligence gathering that in my type of role, I think is critical, because that's really what set me up in the end for success. So
Jay, I fondly remember back, and Jacek is on the call, so you'll remember Jacek and working with him on the project. But one of the things I think you guys did so well in your project, and even though you said you had a delay, I have to tell you, you guys were probably one of the best project managed between yourself and Nirmala. Maybe you can comment about the importance of having really a focused, dedicated project manager of your own, not just relying on the SI, but the importance of having that teaming of project managers.
Yeah, no doubt about it. That is an important piece of the puzzle. It's one thing to talk to me or to Jacek, where we're more idea people that are solution-oriented people. But it's another thing to have, a team in accounting and a team in IT, third-party SI, maybe some other individual contributors, and keep them all on the same page and working to the same goal, especially on a topic like this. You're talking about technical accounting, operational revenue and stuff like this. it's the kind of thing can be very difficult to do. In our case, we had this accounting team who was a blackout at quarter end. They cannot work on your task, or they can barely even be bothered to answer your question for several weeks. You know, once every 3 months, they basically are full stop. So having somebody who's talented with, you know, Microsoft Project and line up dependencies, you know, having somebody who can really task manage and assign action items and follow up on them is absolutely critical. This particular skill set is not my strong suit. I mean, I guess I could do it, but it's not what I like to do in life. So having a person like that who's capable of herding cats, I think is pretty critical. It's very easy on a project like this where we're talking, how should I say, high complexity and a lot of, you know, accounting words, essentially a vocabulary test, right? To somebody who can see through that, get it documented, and get it followed up on. I mentioned also our project, it felt a little bit behind for a while. And part of the reason why is because we were maybe overly focused on requirement analysis, right? And the specification I say here in this first bullet. And of course, this will drive any project manager crazy. You know, that you're behind on your dates, or Jay, your estimate was no good. What's wrong with you? So, you know, having somebody there that could diplomatically yet firmly follow up and document and manage the deadlines was critical.
You make a great point there, Jay, and I think that's another one that we've done 100+ projects, and I would say that the companies like yours, and maybe you can talk to, you know, spending the time on the design phases and the discovery phases, and really thinking through the quality and quantity and thoroughness with which you develop the BRDs, that you make sure that your functional specs are correct. You know, you guys did a good job, you know, really investing in the beginning in that. How important was that to the smooth operation when it went to the actual, you know, realization and implementation for you?
Well, it's I think critical. I'm guessing critical. It's a little bit counterfactual, right? But what I can compare it to is as mentioned earlier, projects where maybe, you know, you're trying to implement 606 from a technical accounting standpoint and put that in a system. Those two things don't go together so well, right? Your accountants are thinking, you know, of interpreting a set of, you know, very lengthy accountingese, kind of legalese rules. They are not thinking functionally in terms of, you know, attributes in SAP that they can use to achieve certain goals. So what I noticed is when any project that tried to do those two things at the same time, it generally took way longer and cost way more money than anybody thought it would. And usually the reason why is because the accounting judgments, the accounting treatments were being refined at the same time that you have people trying to configure and develop in SAP. And so that could just lead to a lot of rework, throwaway work, pause in work while they go check with their, you know, audit firm and advisory. Well, contrast that with us, we totally had that separation. And also, I guess, and maybe it's a lot of it's about me, is that I like to spend, you know, 70 to 80% of the time on that requirement analysis and mapping it to a functional specification, your fit gap, if you will. To me, that's the most important part of any project, and that's where you should be spending your most time. You know, the whole point of doing the project was to achieve your goal. At the end of the day, the business goal, the business outcome really was why we're all here at the end of the day. It's why I got the money to be able to hire people to do this. And indeed, that's how I was measured in the end. You know, the C staff will come and say, Jay, you promised me X, how come I got Y? And they really don't care about anything else. They just wanted to know why they didn't get Y and tell me why. So to me, what that all means is leaving no stone unturned when it comes to gathering and analyzing requirements, right? It should really be the majority of the project. And I say waterfall here, and it's really just to emphasize that for a project like this, to apply like an agile approach to requirements, I think is a little bit dangerous, because you'll wind up late in the sprint cycle only to realize that you've missed something so fundamental that caused you to go back and redo the work. I think with revenue accounting, it's a very easy thing to have happen. So I would advocate for agile development in general, but not when it comes to requirements analysis, especially not on a project like this, where you're talking about something that's very very much a business focus, and not a lot of flexibility. Right? This is it's not sales. We're not implementing opportunity management in Salesforce or something like that, which maybe that would lend itself very well to agile requirements, if you will.
I noticed in here also, and then I'll let Pete chime in, or what is, don't forget data migration. But you and I talked recently in another podcast, webcast that we did together about not just data migration, but data overall. Thinking about, your migration strategy, but what about early on in the requirements and early on in the process, data sources and the aggregation of that data as it comes together? What's your thinking on that?
My thinking is this is easy to overlook. It's easy for somebody working on an implementation, your functional architect in particular, to think, oh, we'll handle reports later, or we'll just send that over to the BI guy and he'll just do it. But I think looking at reports early is very insightful for your solution architect, for your overall solution focus. Looking at the reports helps you understand what they're looking to get out of the system, right? What does the business really need at the end of the day? How are they measuring their success? Mm-hmm. And I would point to this, the old concept of a RICEF, right? The R is in the beginning, it's not in the end. And that's not just to make it sound like a sexy word. I think that's intentional in my world. I say I learned so much by the way people look for data, or by the way they ask for a report, even just the mere words they use to try to specify what they're looking for. And to me, this is it gives you insight into functionally what they're actually trying to accomplish. And indeed,
that's a good point. Yeah.
Right. Yeah. With revenue accounting, a lot of times the whole correctness of the accounting hinges on the availability of some attribute in some context. And if it's not there, you don't have what you need to perform the task, or to automate it in the system.
Yeah, or if it's
definitely a
places.
Focus of mine. It's definitely I happen to manage that function, right? So it's easy for me to say, right? With Jay, you run the BI team, so clearly you talk about reports all the time. But I would emphasize to the curious person who's really eager to understand what makes the function tick, why revenue accounting works, what they're actually looking for when they look at a contract. Reports tell you a lot, just in terms of learning experience and coming to understand your customer.
So kind of related to reporting, but on the kind of the front side is, how important is it to get the requirements right, or spend time on the requirements? And then, of course, that leads to the fit gap, right? But maybe you can spend a few minutes on that, your perspective on that, because this comes up all the time in customer conversation that I have, and I think John does with you as well. I just want to get your take on that.
Great question. I'd just say that it's very easy for, say, an IT implementation person and an accountant of any stripe to talk past each other. They basically speak different languages. It can be difficult for them to truly understand each other, right? You have a IT practitioner using, in the SAP world, they have a very particular vocabulary that can be substantially different than the impression drawn by, say, somebody who just reads ASC 606 all day. I'll give you an example in our project. One of the things we did that I thought was really nice is we did our SSP using the SAP SD pricing module. So in the condition technique, we would derive the SSP for every sales order line item. So you say, Jay, use the word derive, and I used it very specifically because if I said determined to the accountant, they would scratch their heads and say, hey, wait a second. By determined, what they meant was the actual SSP study. In other words, the pricing analysis of how to come up with that master data that they could then feed into the condition technique. And so that was just an example of you know, in SAP, in our parlance, we like to say pricing determination, right? We like to say it's determined at the sales order line by the condition technique. But to say that to an accountant, that usually flies right over their head and actually lands them in a completely different island. So back to the point, why did I say all that? Well, requirements are very easy to misinterpret, right? And you're speaking different languages. It's, you know, I mean, I don't have the problem of, say, being in Europe and having to go between French and Italian and German. That would be a whole nother dimension of it. But just to say that the different language of somebody who's an IT professional versus somebody who's maybe an accountant or a tax advisory. So removing that ambiguity is part of the reason why I spend so much time on that. I really want to make sure people know exactly what they mean and understand each other. You know, even in SAP, there's a degree of ambiguity with some of the terminology we use. You might say item category, but that's a little bit different than saying item category group. And indeed, depending on your implementation, that could be substantially different, right? Which value did you mean? Which value did you want to use? Or in your context, which one is even available, right? So to me, this resolving the accounting terminology into something that the IT practitioner can actually use is absolutely critical, and that's right. I spend a lot of time on that. I think if you haven't done that correctly, then your functional specification, not only does it risk being wrong, but you're not going to figure it out until you're testing. And that, again, to my point earlier about agile, that could put you back in significant ways. I mean, you could be left scratching your head like, oh God, now I need to redevelop all these objects or start over, God forbid. Similarly, you know, businesses change, and sometimes they change while you're still doing the project, right? So you're in the middle of writing this code, or even just you send it out for testing, and you know, the business manager comes back to you and says, oh yeah, by the way, we decided to change it all around, you know, do it all differently now. So again, a well-gathered requirement would also include the propensity to change, right? So to evolve, all businesses evolve as a matter of survival. So if the requirement is properly understood, you would understand its variables as well and be able to react to those changes.
Yep, you brought that up. You mentioned change management, Jay. You guys were pretty much a stickler for change management and understanding what that meant so that people had a perspective on, oh, I can't just go change something because I feel good today or I like something different. There was the impact. Talk a little bit, can you talk about your approach to that?
Yeah, so you're correct to point out this methodology that we use at Juniper tends to be a little rigid in this way. We don't mind spending a lot of time gathering requirements and understanding them. But in return, we expect them not to change during the project, right? And then, how should I say, requesting a change quite oftentimes impact our timeline, impact our resource plan, impact other projects, right? So in that way, we have a cross-functional discipline. So, for example, when I extended this project the extra 3 months, right, to accommodate the pandemic and a couple of minor changes, I had to go and pitch that, to VPs and C staff, explaining exactly why, And they had to come back and agree and say, oh, this other project we wanted to start that was going to use the same IT resources that you're using, the same project manager that you're using, well, they have to be delayed. So it's a trade-off decision. I think part of the reason why you see that at Juniper is we tend to be, our staffing maybe isn't, how should I say, we don't have the deepest bench. I've seen at other companies maybe with much deeper pockets, or maybe just, I don't know, the Twitters of the world, if you've been following the news, they have a lot of extra people around and there's not much resource contention. This is great for them, I guess, but probably pretty bad for their shareholders and their P&L. So in our world, we keep a pretty rigorous change management cycle. We have formalities around requesting small changes as well as the big change that I mentioned, right? So pushing out a couple months, and but I think I even had to ask for a little more money, and I basically had to bump some other project start date by a couple months. So I had to go to that, that business stakeholder, whatever the VP that was sponsoring that project, and kind of like persuade him as to why or what we could do to mitigate his resource contention. And I don't know if you remember, but there were certain times in that project where I myself had to go work on another project, and I had to leave you in the hands of Nirmala entirely, right, to move forward. And that's
Absolutely.
part of the symptom there, right? Is when you're managing the business the way it was really meant to be managed in a considering the needs of employees and shareholders and customers. You have to do that, right? You have to be actively managing.
Maybe one more question kind of at the top level, which is, you made in one of our pre-calls, you made some interesting comments about kind of what your finance team thought about, the project before and after. Maybe you want to comment, and some of it gets maybe to some benefits you were hoping to get and what benefits you actually got. But I think maybe your CFO made some comments that I thought were pretty interesting.
Yeah, so it was an interesting moment. So I'd spent 6 or 8 months essentially preparing a proposal, a plan. I had estimates. I had cost benefit, what you'd expect, right? To go in and pitch and say, hey, we need resources, we need money, this is the project we want to do. And we're all really worried, at that moment. It wasn't, what should I say? There were a lot of projects going and asking to get started and being told to wait. And budget was a little tight that particular year. So we went into this meeting a little bit worried. Like we figured they were gonna tell us that we had to wait. But from the CFO perspective, I think the thing that really was appreciated the most,
very good,
right, was that ability to actually see the revenue in quarter every day, to actually understand where you are and be able to actively manage the business in that way. And as soon as he came to understand that that's what I was pitching, he basically looked at me and said, can you start tomorrow? And now this again, coming from a world where our revenue was manual, it was labor intensive, I could give you a 2 or 3 forecasts and then close the quarter, and that's about it. It made it very difficult to kind of run the business, to understand where you needed to be maybe more aggressive at pulling in sales or in your supply chain versus, maybe you're in a comfortable position and can think about other things.
No, I think that's great. I mean, I think, that's, I think it's very helpful for some folks on the phone, right? Just because they're in your shoes now where you were, 4 years ago. So.
Right. You think of that as like the FP&A position. So if you're FP&A team, they're trying to figure out what your earnings per share is going to be, and they want to know, 90 days in advance. So that forecasting can be very difficult. It's one thing to sit there in your Tableau or Analytics Cloud or whatever and just do linear regression. That's cute, but it does need to be managed, right?
Yeah.
say that about a lot of things, but that was the thing that the CFO and again the perception of a corporate FP&A department really appreciated. You know, I could talk about the chief accounting officer who loved the idea of an accelerated close that's more accurate and structured in a system that's more auditable. You know, moving off of some manual process or out of some boundary tool is typically going to appeal to a CAO in a big way. And you know, even just around the enterprise, you know, and a big focus of our project was the BI aspect. So in other words, just not just disclosures and revenue reporting, SEC reporting, but rather how can different stakeholders around the company be aware of what's going on? Say, if you're in sales finance, managing a deals desk, how do you look at a quote or an opportunity or an order and understand what the impact of a concession will be? Right? In the old days, you had to email the revenue accounting team, and then they had to go look at the contract and ask all these questions. You know, 3 weeks later, you get the idea of some guess, right? If somebody worked it up in Excel. But now we can actually calculate that. We can actually pull the SSP right off the condition technique, right off the transaction, quickly do math on it, actually design some reports to do the allocation. So your basic relative allocation, I did right on the reporting layer. Similarly, for those of us that have more exotic scenarios, like your variable consideration, your material right, these too can be accessed and exposed, say, in the context of a sales order report or even a quote, depending on how you configure your system. So that kind of visibility was key for the sales executives and sales finance operation, right? The ability to improve your decision making in deals desk was a big appeal for us.
No, those are all great insights. So thanks for sharing them.
I would say those are all reasons why I picked RAR as well, because I wanted this in my ERP, right? I wanted this as tightly integrated as possible. You know, we did look at other systems, third-party, boundary. We looked pretty much everywhere. Any vendor that sold something for revenue accounting. But if you follow those benefits, that squarely pointed us to RAR.
That's great.
Jay, I'm gonna go for a shameless plug here for you, but you know, whether you consider Bramisol or other partners, what's the importance of having a partner that has a really good understanding of not just RAR itself and a relationship, but understanding the upstream impacts to help you really get the project moving and keep it on track?
That's vital. You know, going through an SI kind of RFP is it's something I love and hate to do, right? It can be a lot of work and take a lot of thought and consideration. It can be really tough on your relationships in the industry sometimes. But you know, the other side of it is if you pick the right SI and set them up for success and hold them to their commitments and their core competencies, then that to me makes all the difference in the world. I think, John, one of the things I said to you when you asked me to present today is that you know, I'd been to a lot of these meetings, I'd seen a lot of these presentations, and a lot of times they're very technical, right? They're talking about versions of RAR and OSS notes and stuff like this. And you know, the way I see it, that's why I hire you, right? I hire you to know that stuff. Right. That was part of the appeal, right, of having an SI that's very closely linked to SAP, that's very focused on the tool that I'm trying to implement, but yet can balance that with the kind of up downstream impact. You know.
Well, it was certainly one of the best projects we enjoyed working on with you, Jay. So thank you.
Yeah, it was a pleasure doing business with you guys, and certainly Jacek, the whole team did a wonderful job. And indeed, you know, going live during the pandemic was, I think, something very, very special. So, but to your point, I have had the misfortune of on other projects of maybe not having such great experience with the SI, and learning some tough lessons, right, about how to pick an SI, how to work with an SI, how to manage an SI.
All right, well, Jay, I want to thank you so much for coming back to the user group community and sharing your experience. I think that was a wonderful contribution, right, to everybody's knowledge, and just you know, we look forward to you know, hopefully seeing you in an event out in the Bay Area next year. So all right, so with that, I think we're about ready to wrap up. I guess we have a few minutes if there's any urgent questions. We will post a recording and the slide content. We'll send those links out via everyone that's registered. And then also we'll get set up a replay registration. So if somebody wants to watch the replay, they can just register for it and they'll get the link for the recording and all the content.
Joe has a question.
Joe's in the room.
Yeah, and I'm not sure if.
We're gonna stay here after, so, you know, if you wanna have.
All right, that's fine. You
everybody
could,
here.
I don't want to take up a lot of time, but just, so for our company, we're going to S4.
Yeah.
Okay, we're selecting an SI in the process, right? But we're faced with the challenge of, do we make the decision to go to RAR before S4 or during the actual go live
Great
of it?
question.
Yeah.
Yeah, so Joe's question, so you can hear it, is, you know, they're gonna, I think they're gonna adopt RAR and they're gonna adopt S4, and what's the best timing to do it? Do they do them both at the same time, one after the other? So I'm gonna give you the answer that I think Joe would give, which is it depends. But anyway, you'll get, afterwards we'll have some networking, we have some, those folks over here are all consultants. It really depends. I would say from my experience, the RAR on, you know, ERP and the RAR on S4 has a lot of commonalities. There certainly are more features on the S4 version, but if you have the time, as Jay was talking about, you know, the requirements gathering, getting the accounting right, the processes, all that stuff can be done now. You don't have to wait for S4. So I would say, you know, whatever time you have now to do that stuff, because, you know, Jay also mentioned, hey, their accountants sometimes get caught up in quarter end, right? And you can't get them all the time. So my perspective on this is, you know, anything you can do now, even if it's a proof of concept of getting the requirements done, doing it on ERP, that is very easy to transfer to S4. Now, it's also, the flip side is if you can do it all in S4, then, you know, you save some effort. But, you know, I guess my recommendation is the sooner you get requirements down using the tool, you know, you're started, right? You know, the sooner you start, the better. I'll open it up to John or Joe.
If I could just comment on what you just said. So the quick answer is you can actually do it either way in ECC6 for us or directly in S4. But it sounds like there might be a little bit of rework if you do it.
Not necessarily, it depends. There is a way to do a technical upgrade. It turns out the classic contract management objects that work on ERP work on S4. The rework could be in that if you have a lot of customizations of features that, let's say, aren't in ERP, but are in S4, then that would be rework. But if you're planning that in advance, I think you can minimize rework. But this is where you need to do a little bit of, you know, yin and yang, you know, back and forth and tossing out those options, discussing it. You actually have two very good options. It's really a question of now what's the best for your company and your situation.
Okay.
I would agree with Joe. I would agree with Pete's assessment spot on. I think we always say it depends. Again, it depends upon your individual situation and what you're trying to do. There is certainly, if you can do things in ECC now and you can get the basic things set up, SAP and most SIs like us have a great smooth process for managing you to move to S4HANA. Having said that, if you're doing an S4HANA project and it's just a technical migration and you're just going to technically migrate, yeah, that makes more sense. But to the extent that you're really trying to change a lot of your processes, change your data structures, take advantage of things like your business partner structures that's in S4 versus the different structures that you have for data in ECC. A lot of that is an open conversation that you need to think about as you want to move. Pete brought up classic contract management versus optimized contract management or optimized inbound processing. All of those are issues that you ought to think about and consider. And what I would recommend is talk to an SI, talk to other companies who've done it. We have our own companies we've done it with who are references. And you can talk with them about why they made certain decisions. We've had different customers do different things, quite frankly.
Mm-hmm.
So, it's all part of, again, as you go through one of these journeys, talk to your partner, talk to SAP about what the experiences are. We've done, SIs in general, we've done hundreds of projects. We've done over 100 projects. We're happy to share with you our insights and experience and, work with you to figure it out. That's what it's all about.
You already own the tool. I mean, one of the reasons why RAR is bundled with the core and bundled with maintenance is we knew going into this in 2014, 2015, that this is a complicated subject. And in many ways, a lot of the customers have been rolling out in phases. So, they do a little bit and then they put that in the POC or the pilot, usually it's a pilot, and then they do a little bit more. But that's also another consideration, the change management and the availability of your resources, right? If your finance team is tied up, every third month for a month, when are they going to work on this? You got to kind of squeeze it in. So that's a factor too. And I would say just, when we're early on working on the solution, we had a lot of workshops with the Big Four, and they said just, putting the requirements down and forcing them to go into a rule-based system really made sure that the accounting was clarified, right? Because if the accounting's not clarified, you can't put it in the system, right? And so that's where I lean toward, the more you can do that type of work, or you could say, look, I could do the pilot right now in ERP and start learning this stuff. And then, that is still very helpful for my planning in S4. So you have two very good options. It's really now a question of how do you figure out what is the best one to do? You're going to be successful either way, but if you have a little time, you can now really just start to dig in and figure out what makes the most sense for you, right? And your company, and the timing, resources available, other targets you might have in terms of transformation or accelerating your close, for instance, or reporting.
Right. All right. Thank you.
Pete hits on two good things. It's the timing and resources. If you can start doing little steps now, you're going to benefit in the long run. Even if it's a little rework, doesn't matter.
Okay.
Yeah, because as Jay pointed out, Joe, I mean, they got benefits, and many, you get benefits from RAR now anyway. Depends also on your timing of your S4HANA project. We had, I don't know if they're on, but HPE, we spent a long time working with them. They did ECC, they did RAR and ECC first, because they realized the benefits of looking at the upstream processes, the systems, consolidating to a single view of revenue accounting that gave them some insights to allow them when they went to the bigger S4 project with Deloitte, and then we did their RAR project. That helped them really have a better understanding of what they needed to do. Others, kind of did it in stair-step ways. It really depends, again, on what what you want to accomplish as an organization. So,
right. Okay.
Okay, well, we'll stay.
We'll be here.
We have two questions in the chat, and I think they're for Jay.
Yeah.
So Kent, I think you have one for Jay, right? Is this for Jay? Yep.
Great.
Yes.
So Jay, are you still on? There's a question. Did your RAR scope include non-deferral revenue such as ship and bill contract?
Non-deferred revenue. I'm not sure I know exactly what that means, Kent. Could you explain that a little more? That the ship and bill contract that you're referring to, what you're using this business.
Right.
Scenario?
So in one client case, they had a lot of just they ship the product, they send the invoice, they recognize the revenue right then. There's no deferred event to account for, but they wanted to include that high volume of contracts because down the road they expected those contracts to be tied to other deferred revenue examples. And so I was just curious if Juniper had a lot of where you basically ship the product, you bill it, you recognize the revenue right away. There's no deferral period. And did you include those in the RAR solution?
Yes and no. There were scenarios that we did include, but I'd say our scenario there, the most similar thing we had is a point of sale revenue. So in other words, a consignment, if you will, right? So our distributors will take inventory, put it on the shelf, and someday, and it might even take a year, in the extreme examples, maybe longer, they'll sell it to the reseller, the customer, and send us a point of sale report. And so our challenge there was we have a couple of reserves in play, right? So there's what we call a rebate reserve and a return reserve, which were a little complicated to manage. Really, the structure didn't. I mean, I'm sure I could get RAR to do it, but it just didn't make as much sense to do it that way. And also, we're using a product called SAP CRM to manage that, which was another one that just kind of ramped the complexity to try to pull that off in RAR. So that was part of that kind of 10% of our revenue that we didn't put through RAR. And it was also part of my challenge to the accounting team was to essentially say, hey, that's a different contract, right? So if that end customer, they happen to buy our hardware from distributor inventory and send an order for a service contract to us, those are actually two different revenue contracts. There's a significant argument, at least I thought in my mind. And then they started reading into that and checking with auditors and getting different opinions and came back with, oh yeah, we can consider those separate contracts. And it is way better. Thanks for asking, right? So that was my take on it. Now with that, I wound up doing another, I hate to say it, I did a little custom subledger. And the reason why I did that, because in 606, it turned out that we could take some of that revenue, okay, up front. But I think to your point, it was really the non-deferred, right? So the revenue reserve, if you will. And so we had a way to at least build that out as we're shipping orders. So as we're shipping orders, it can hit that reserve. And then, we'd come in and adjust it later, right? Top it off. So yeah, we wound up doing a kind of a separate little project for that. Turned out to be actually pretty easy, that we just coded it in ABAP, right? We didn't, I think putting it through RAR would have been theoretically possible, but maybe just a little harder. And we all kind of scratch our heads like, why would I bother, right? I have my condition technique, very robust. I could estimate the reserves. I could put the SSP on it. I could do all the things I wanted to do with the condition technique to give the visibility. But since my CRM wasn't really connected to RAR, and since I had these reserves, that there was a manual component no matter what. I mean, if you think about just the reserve and the release and the calculation thereof, it's a little awkward. It's not really transactional in that way, right? It's statistical. It's an estimate that you do. So
yeah, for some companies where that might be just the opposite, 90% of the revenue and 10% is the deferred piece, but they expect that 10% to increase. That's a real key question to think through on how well that fits and how do you want to approach that. So thank you. You answered the question perfectly. I understand.
You're welcome. And I think to your point, if 90% of my revenue were in that motion, then I'd have definitely put it in RAR, right? It would have been a totally different calculus. So I'm sure I could have pulled it off. It's just that, for the risk reward, it just wasn't there. So again, 90-10 is one of my mottos going into these projects. Don't do too much. Don't try to do too much. I think that a lot of people make that mistake, right? Especially business people. They try to get every little thing automated. And as an implementation artist, you have to know where to draw the line and put your foot down and say, that's a corner case, and we have a workaround. So we're gonna do a topside entry for that. Great question.
Okay, great. Thanks, Kent. Good to see you again. All right, the next question comes, I think, from Shiva. And we covered this a little bit, Jay, in one of our pre-sessions. The question on the multi-company code, multi-currency. It says, when mentioned avoiding multi-currency, multi-company code, multi-currency, where did you realign those business scenarios?
Well, I guess well, first off, I should preface this with, I am not an accountant. I don't give accounting advice. But I know a lot about accounting. I know a lot about finance, and I know a lot about financial statements, and I do, at least used to, file my own taxes. So when it came to this multi-company code, multi-currency topic, I guess when I first read through the FASB, ASC 606, it strongly hinted that a legal agreement with a customer amounted to a revenue contract, right? In your legal agreement, you might fix pricing, for example. Usually the legal agreement is between two holding companies. And so on my first read, I walked away thinking, oh, geez, I need to have a multi-company code, multi-currency, contract in RAR. And, it slowly over time, I started to realize that actually was going to be a really hard thing to do. I was really worried about it. Do I need to, add op-oppers to my project? I was thinking all these things. But at the same time, as I do run the BI function, I was working a lot with our tax team, and this is right on the heels of the Trump tax reform, right? So we were looking to all our consolidation reporting and statutory reporting, stuff like this. We're actually in the process of implementing statutory ledgers in our SAP environment at the same time. So in this context, I started to get the wind that maybe that's not exactly right? So, again, referring to a legal contract as a revenue contract, and the two, you're tempted to think that they're the same thing. But what I came to the determination is they're not. They're absolutely not the same thing. And you probably shouldn't have a multi-company code revenue contract, because if you think about an arrangement, it's between two legal entities, like a transaction. It's more transactional in that way, in that, you're going to ship me these products and I'm going to pay you this money, right? Or you're going to provide me this service over time, and I'm going to pay you money and share my data, or whatever it is, right? So if you start thinking about that way, the contract is really between the sold to party and the payer contract. So that's the answer to your question, Siva. So what in the past had been, hey, anything you sold to this customer, doesn't matter where in the world it was, group it together and do an allocation on it, translate it to USD and all this, slowly became, in reality, a revenue contract, if you really read 606 and understand it at this level, you have the flexibility to define that more along the lines of an SAP sales order or contract, right? So in other words, you have a sold to party, just one, in a company code, just one, and that's your contract. Now, there's a lot of wiggle room there. It really depends on your business and the way you do business. As an example, I used to work for a software company where they had a global agreement that they'd signed with big customers, and it had, fixed pricing, and then the transaction, it maybe the way it flowed, the volume discount was across the world or something like that. It's based on all the stuff you bought around the world, and then maybe you're squarely back at a step one there. You have multi-company code contract, but to me, that it's accounting, much like computer science in this way. It's a bit of a vocabulary test, and there's a lot of flexibility. The meaning of words can be refined, according to your scenario. And in our world, I guess what it amounted to was an accounting memo, an accounting judgment, checking with the auditors, getting it through the CAO. I think ultimately understanding that it was just better for us to do it that way, to keep the revenue contract within one company code and one currency.
All right, very good. All right, I don't see any more questions. All right, Shiva said thanks, good. Just a few, I think, closing comments. We did a little check this morning, and we think there are now about 370 active RAR users or companies around the world. So about double since the last time we met in terms of in person. But yeah, definitely the community has been growing very very actively. And I think on the cloud side, I didn't get a chance to confirm with Volkmar before it dropped off, but I think we're well over 100 there and probably even higher than that. But anyway, we're about 500 customers, I would say, you know, across all the automated revenue portfolio. So anyway, lots of things are active and moving forward. There's lots of activities. So appreciate everyone joining today. We are planning to have another one in Q1. We just haven't thought about, like, you know, maybe this time the in-person event would be maybe Remsol offices in Bay Area, or, you know, sometimes, you know, before the pandemic, we had some customers that were hosting, so we'll probably get back into that mode as well next year. Now that it looks like the pandemic is finally and thankfully over. So, John, any other closing comments before we wrap up?
Oh, it was great to see everybody on here. It was a great reminder of the power of the user group. So,
Yes.
then as Brent, you know, we continue to enjoy the partnership with you, Pete, and continue to see great innovations in RAR. And I think that, you know, everybody should look for all the great stuff coming in the cloud that Volkmar talked about.
Yes, I want to thank Volkmar and Martin for their product updates and the product team's efforts, you know, especially with not only new products, but also, you know, the tickets. They always are looking very careful at all the tickets that are logged. And Jay, for your time today and for prep for the session, so really appreciate that.
I think the other thing, Pete, is that the other exciting thing is the more we see companies moving towards the digital economy or the digital solutions economy, I think RAR and its combination with BRIM will become more and more a hot topic for everybody. As you implement consumption, user, outcome, it just stuns me on the kinds of businesses.
It's not getting easier.
No, the kinds of businesses you and I talk to on a regular basis of they're moving to new models. So, but it's also great to see all the great new names, all the famous names on here. So,
right.
I can see Mike Szabo saying, "Thanks, Jay, for the presentation." Great to see Mike out there again. So, hey, Mike.
Yeah.
Yeah. Hey guys, thank you so much. Was a very, very good presentation.
Great. All right. Well, we ran over a little bit, so appreciate everyone's time. We're going to do a little bit of networking here. A few folks here in Newtown Square. So anyway, have a great rest of your day and holiday season and New Year, and we'll see you again.
Stay safe and healthy.
Yes.